So the S&P 500 saw a very sizable bounce off of this demand range. I mentioned this range back in our Sunday video, and this has acted as a support many times now in the past. You can see just for example over here on May 2nd, it was actually broken through here on May 3rd, but we had a gap up that was able to reclaim this level. And one thing I want to note with this gap up actually, as a little tip for you guys, we have a double gap scenario right here. So for example, we have our first gap down, which is over here between May 3rd as well as May 4th. So there's a gap right here. And then the day following, we had a gap up back above the previous gap that we saw from over here. So there's a double gap scenario, which is one of my actually favorite setups to trade. Typically this acts kind of like a magnet for price. Typically within 1-2 weeks max, you see a double gap filled. This tends to be the case. And like I just said, it works like a magnet for price. So typically you'll see price get pulled into this again within that first week, sometimes 2 weeks max, to make sure that this gap fills. So it's very rare that you see one of these setups left unfilled, especially after that 2-week range overall. So do keep that in mind, because we did have a large bounce off of the demand zone here around 4,100 intraday. So this gap was unable to be filled at least for today. And based on the strength of the bounce that we had from this demand zone, it is likely that we will retest the supply zone up here between 4,170 to 4,195. This is also a convergence between this trend line right here. This goes to the 2018 high pivot before we had the correction back during that year. So there's a nice convergence of numerous resistances up here. And again, based on this bounce, it seems like this would be the most logical scenario either tomorrow or Friday. However, after that, it is very likely we do see rejection back down to fill this double gap here. Again, something like this does not stay unfilled for very long. So just keep that in mind as we go forward, especially if we continue to go higher up from here, because that leaves a highly probable setup, at least for a trade to short down to at least around the 4,070 to 4,050-ish range for this gap fill over here. Personally, I believe we will continue lower after that. However, this would be the first target after having some form of a bounce that we saw today from the 4,100 level all the way up to this supply zone. So keep that in mind as we go into the next 2 days here. As for CPI, basically was a whipsaw day. We did see CPI come in at 4.9%, which did lead to some form of a gap up. However, the gap was sold into intraday, and we saw continuous downside again all the way to this demand zone. However, bulls were able to pick it up from this demand zone and close it a lot higher. So just based on the daily chart over here, you can see that we did retest this pennant trend line intraday and we're able to close back up above it. So at least in the short term, the reason why I think we still are going a little bit higher here to retest this supply zone that I just mentioned earlier is because of the bounce that we saw today. Bears were not able to hold it under the trend line that we have right here, and they were able to pick up the daily candle at least above the retest of that trend line, which shows that there's a higher likelihood that we continue a bit higher, at least for Thursday, potentially Friday. Also, at least based on the weekly chart, as you can see over here, we have seen numerous supportive pickups just based on the candle for each weekly chart. We have this pickup over here on the week of April 24th, as well as last week, the week of May 1st. We saw pickups on both of these, as you can see from the wicks on both of these candles here. They're about equal length on the wick. So we did see lower price discovery back into the pennant. However, we were able to close back up above. And just recently, as of today, we did retest it for the third time after breaking above. So it seems logical that there would be a little bit higher price discovery after this before taking another crack to attempt to get back within the pennant to make all of this a fake breakout, which is my goal here. And that seems like the best setup, at least in this scenario. So that's something to note, as well as the dark pool premium from today. We actually didn't see that much yesterday and the day prior, at least for Monday, but we did see 2.8 billion at the 410.93 level. So do mark this level on your charts. Again, having something close to 3 billion or even more than 3 billion is definitely something you should take note of. So this level is going to be crucial going forward. We did have a daily close above it today. However, I'd like to see what the weekly closes at, because we do have some other levels around the 414 to 415-ish range that are above the current daily close from today and are very likely to be sells. For example, from last week, we did see all the way back on last Tuesday over here. We can't go back to that just because that print hit the tape over a week ago, which by the way, there is an update approaching for cheddar flow that you will be able to analyze a lot of historical dark pool data, and you'll be able to go further back than a week. So you can look forward to that very soon in the future. But we saw over a $4 billion signature print on Tuesday of last week, and that was around the 415 range. So we know that there is a lot of premium hitting the tape up here. And if I just go to SPX Chart, you also can see a lot of this premium has been hitting the tape right around this orange line over here. I've mentioned this in many videos on this channel, which if you are new here, by the way, do subscribe below. All our videos are completely free, and we do them every Wednesday and Sunday here on YouTube. But this orange line, if you've been around the channel for a while, you know this is the one from the 2009 low that you can see here on the weekly chart. This goes all the way back to the 2009 low back here after the great financial crisis, and extends all the way up to before the 2020 crash, as well as the 2018 correction that we saw. It actually prompted both of these sell-offs, or at least was the main resistance that both of these sell-offs started from. And now we are flirting with it yet again, as you can see here on the weekly chart. We've had numerous rejections off this level, as you can see from back here around the November to December time period of 2022. Also over here, we had a fake breakout in January to February of 2023. And yet again, we are right on this level, and it's acting as a hard resistance. And not only is it acting as a hard resistance, we've also seen a lot of dark pool premium around this range. And based on my experience, this is a form of distribution right now. We are chopping, and we have been relatively range bound for over a month now. You can see we started this range all the way back in early April, and now it's already May 10th. So we've been around this range from roughly 405 to around 415 for the past over a month time period. So this is very likely a form of distribution, and we also are seeing that confirmation via the dark pools. We've seen 2 billion plus, 3 billion plus, and even a $4 billion plus dollar print all around, especially this 410 to 416 range within that past month time period. So it seems very likely that this is just a ticking time bomb ready to fall. Again, there's still potential that we have another retest of that supply zone range here on SPX just based on today's daily close. But nevertheless, it seems like we will enter a sell period where we do fall out of this range. And typically when you see ranges like this, especially tight ranges, it tends to act like a coiling spring for whatever move ends up occurring. A perfect example of this would be all the way back here in early February. We saw a lot of this distribution, which also, by the way, we saw a 2 billion plus and also over 3 billion plus dollar print all the way up here around that 415 to 414-ish range before we ended up selling from here. And this was a perfect distribution phase where we saw a lot of consolidation for about 2 weeks, and then we had a hard sell-off down, and then we had the bank issues around this time period and continued a lot lower for the retest of the downward trend line. So this was a perfect distribution phase that had a sell afterwards. This one over here is a lot bigger than what we saw back in February, so it would seem like this spring is coiling a lot more than we saw previously, and therefore this would be an even more extended downside move. Of course, we'll have to wait and see, but it does seem very promising right now. This is a form of distribution, and also the risk reward is more substantially to the downside, just because we know price has been capped in this range many times as a high point of a rally. All the way back here, you can see in December of 2022, we were capped around this 410 level. We saw us get capped around the 415 to 418 level back here in early February, and now we're right around that similar range. So there tends to be a rejection in this range just based on price, as well as if you look at that 2009 trend line, tends to be a rejection around this trend line each time, with just a fake out being the case over here in early February. But nevertheless, tends to be the case that we have local highs around this range. So do keep that in mind going forward. Also, the last thing I want to mention in today's video is Bitcoin here. I typically don't mention crypto in these videos. However, it does have some form of an influence, especially on tech and growth stocks in the stock market. So for example, whenever you see a pretty substantial move, kind of like the short covering rally we saw back here in early January of this year, tech tends to follow very closely this price action, specifically the beaten down growth stocks within the NASDAQ. And over here, when we saw this very substantial short squeeze, we also saw a lot of those growth stocks within the tech sector also squeeze along with Bitcoin. So the reason why that's important is because I see a potential for quite a bit of downside here on Bitcoin for a possible pretty substantial head and shoulders pattern, with this being the left shoulder over here, this being the head, and then a potential right shoulder over here, which would warrant downside all the way to about this 20,000 level. Again, yeah, I know it seems very substantial. However, one, we know Bitcoin is very volatile. We've seen it in the past all the way in 2021, 2022, we were collapsing to the downside. Also, the inverse to the upside, we've seen pretty substantial short squeezes, but right now it is in a triangle top pattern. One could also argue this is a diamond top pattern, and these tend to be a form of distribution before a large sell-off. And right now we did just recently break below this pattern right here. So I'd give it it about a week for it to stabilize around this level. It doesn't have to sell off immediately, but this is something you definitely want to keep in mind of, especially because there's a lot of room for selling below this level right here around this 28,000 level. There's still potential we could have another bounce off of around this trend line. We saw it back here where it kind of dipped below for a bit and then continued to the upside. So there's still potential we could continue to the upside, but the upside would be very limited to around this 29,000 level, which would be a retest of this trend line right here. And then after that, I would assume we would end up falling from this triangle top formation, which would warrant a lot of downside afterwards. So keep this in mind, continue to watch Bitcoin here. Also, there are tradable ETFs that you can trade Bitcoin with. For example, a BITI is an inverse ETF for Bitcoin. So if you were to buy into that, you would be betting on downside for Bitcoin versus the upside ETF would be BITO. So you don't necessarily have to have a crypto wallet to benefit on Bitcoin's downside or upside. Those ETFs just make it a lot easier. And also you could just bet on tech. You don't even have to attempt to catch downside based on Bitcoin's price action, because if Bitcoin does end up selling off from here, one, it would likely be substantial, because typically with those triangle tops, you see a substantial sell-off afterwards. So we also know that tech would likely follow with that, and we would see some decent downside in tech as well. So some things to keep in mind. Otherwise, appreciate you guys watching this video, and I will see you guys next time on Sunday.